Hello, my name is John McGovern and I'm a new business development manager here in ITC. I'm delighted today to speak to you about this financial opportunity. The pension property opportunity can provide you with a long-term income generating asset in retirement alongside a strong capital growth potential aided by government tax incentives. This self-administered pension property opportunity allows you to take investment control. My brief presentation will cover why property works for pension investment, the revenue rules on pension property, and the ITC solution and process. Firstly, I'd like to give you some background on ITC and why we believe we are the experts in pension property. ITC is established for over 20 years now. In that period, we've been at the forefront of the development, best practice, and structuring of pension property in the Irish marketplace. We're also very proud to have been awarded Independent Trustee of the Year in 2017 and for the last 4 years. Our track record is second to none. Our charging structure is competitive, simple, and transparent. So let's go through the pension property opportunity headlines now. All contributions to a pension fund with ITC are 100% allowable against tax. Those made by a company are fully allowable against corporation tax, and those made personally are fully allowable against your highest rate of income tax and PRSI. No capital gains tax is payable on the pension property, growth, ongoing, or upon sale at a future date. No income tax is payable on the rent incoming from the pension property. Upon retirement, there is a seamless transfer of the pension property without cost to the ITC approved retirement fund, where one can commence drawdown of an ongoing rent as an income. Annually, ITC, as custodian, will prepare and submit annual accounts on the scheme to the Revenue Commissioners. There is no requirement for the individual to include the property in an annual personal tax return. I will illustrate some examples shortly to demonstrate how effective this opportunity is. So let's just cover the revenue rules on pension property now. The pension property can have different characteristics such as residential homes for renting to tenants, commercial properties such as offices or shops, syndicated investment or development property. One of the advantages of the ITC pension schemes is that individuals upon request cross-invest in the same property to maximise the investment scale and opportunity, such as a husband and wife with their individual pension funds combined to purchase a residential property or commercial property containing shops downstairs and tenanted accommodation upstairs. The revenue clearly state the sole purpose of the pension property must be to provide benefits on retirement. The revenue state those connected with the property must be at arm's length. For example, no renting to relatives or using the property for holidays, etc. The revenue don't allow trading of property ongoing. The revenue insists on a certain amount of liquidity must be retained in the scheme at all times to allow for the discharge of all fees and liabilities. We would generally seek to retain between 5% and 10% in the scheme as liquidity depending on circumstances. The revenue allow gearing or loans attaching to a pension property for a maximum period of 15 years and up to 70% loan to value. All loans must be fully repaid ahead of retirement and cannot carry into an approved retirement fund. The revenue require the appointment of a property manager to reinforce the arm's length rule. Let's take a look now at some examples of purchasing a property through savings versus through a pension property scheme. As previously mentioned, 100% of pension contributions are allowable against tax. Rent receivable is tax-free in the pension scheme, which is a saving of up to 50%. The sale of property is free of capital gains tax, which currently runs at 33%. The worked example assumes the purchase of a residential house worth €200,000 with a 50% loan attached over a term of 15 years. The property capital growth rate is 5% and delivers a rental yield of 6% and an interest rate of 5.59% on the loan. As you can see in my first example, the standalone property funded and paid for using net income and savings delivers a value of nearly €395,000 after 15 years, compared to the geared pension property fund value of €631,000, which is nearly a 60% differential. This differential increases to 70% when loans are not in the equation and interest repayments are removed from the same examples. The ITC pension property purchase process and expertise is known as property line. Our ITC property pension team is very experienced and includes practicing solicitors who will liaise with the client's conveyancing solicitor to finalise the property purchase smoothly. We would, however, strongly advise that the client's ITC pension scheme is firstly established well in advance of purchasing a pension property to ensure that structure is in place, ensuring no delays that could lose a property purchase. ITC have a comprehensive suite of self-administered pension products to facilitate the purchase of pension property, including an executive SAS, a PRSA personal savings account, a buyout bond, and an ARF approved retirement fund. As I previously mentioned, they are all competitively priced, and it is possible to combine several pension products to purchase a pension property. Given the current values in Irish property, we typically see individuals with previous pension entitlements totaling, for example, €200,000 or more, transfer these entitlements to an ITC buyout bond, and then use these assets to purchase property. On other occasions, executives divert company profits tax effectively to an ITC SAS to purchase property. We'd be very happy to discuss individual cases. ITC have unrivaled support, resources and infrastructure, including business development and technical teams, as well as a number of useful online tools. So finally, here again is a reminder of the pension property opportunity highlights. The outlook for property in Ireland, particularly residential property, is very positive. There is a growing recognition and acceptance that long-term renting will play a significant role going forward in Irish society, given the difficulties of obtaining a mortgage. This makes the pension property delivering consistent, long-term rental income, allied to strong capital growth, very attractive to you, the pension investor. Thank you for taking the time to listen to me. Please take the opportunity to contact us to discuss your pension inquiries and circumstances.